Welcome back. As promised, we have Prakash Diwan who's joining in to help us out with some fundamental analysis. Prakash, good morning. From the Nifty pack, you have Titan that will be reacting to the update that they have put out. Your view on the stock?
Well, good morning, Nigel. So I think this is very encouraging given the fact that it's pre-festive season. So you can imagine if the festive season were to have some sort of a continuity of this salience, things could look very promising. Again, I think in markets or times like these when you have a lot of issues or skepticism around valuation and the quality of earnings and all of that, Titan stands out as a very, very formidable play. The only challenge is that if you don't hold it for the long term and it sees a little bit of a correction from here on given market conditions, you will probably have to keep averaging out even at lower levels. So you have to be ready for that. But I think the earnings profile, the contribution, the mix that they are getting, apart from jewelry, the other verticals that have started contributing, it's very positive. So quite positive on this. In fact, I would recommend people look at it and seriously add it to the portfolio, as I said, in a staggered.
Prakash, hi, morning. Good to have you on. So let's get some thoughts in on Tata Motors. After quite some time, we are hearing of a good update coming in from JLR, right? Those numbers are looking good. And you have China, which maybe is firing up, and other central banks are cutting rates. So I don't know, there seems to be enough and more money going around the world. Markets are still higher. But I don't know, I mean, the stock has done not too much this year, calendar year, compared to the rest of the market. What's your view now?
Good morning, Sarvi. So I think you said it. The stock has gone into a phase of consolidation between this 900 and 1160 kind of a zone. And that was required because the surge that you saw last calendar year, it was phenomenal. And a stock like this, a big, name like this, when it kind of moves up so ferociously, you need that consolidation so that, it sets a base for the next round. Look at the numbers. This is the same company where 2 months back, somebody came up with a report and said JLR is past its prime. Globally, it's not going to be able to clock any good numbers. Of course, I'm not even factoring in the China revival, because the Chinese revival might not translate into JLR sales as much because the focus is so much on EVs there. Every second car that's being bought is an EV. So, it's going to be difficult for them to grow at the same rate as they did in China. But the rest of the markets, there's absolutely no dearth of what acceptance they have. And at some point in time, they'll also kind of, move into the EV bandwagon or the higher end with the I-Pace range of cars, the Jaguar portfolio. So my sense is it's a stock that will actually do very well from here on. But you need to kind of give it that time to have this earnings catch up. And of course, the balance sheet deleveraging will also start playing out very well at some point in time. My targets here are actually upwards of 1500 in the next 12 to 18 months. So it's a significant move. But yeah, you need to have that conviction that this is a company that can do. Big trigger there, the rationalization of the CV portfolio here. As and when that happens, you'll probably start seeing the market talk about it very positively.
Prakash, hi, morning. Out of all the banking updates Abhishek was telling us about, anything stood out to you?
So, good morning, Prashant. What's interesting is that some of the SFBs have mentioned and shared very high growth rates in terms of the deposit base and AUMs and all. I do remember AU and Equitas particularly. Of course, AU has a little bit of a corporate action, as Abhishek rightly pointed out, attached to it. But look at Equitas. This is not a company that's been very aggressive on rates, but it also has clocked some decent growth rates. Of course, YOY again. What it tells you is that if you're willing to do the right things in terms of pricing yourself, there is enough money available to convert into deposits. So a lot of these large banks which are, finding it difficult or claiming to find it difficult in terms of deposit growth, that might, that logic will have to be relooked at. So we'll have to, of course, understand from the commentary of these banks, what is it that's helped them do this? But my sense is the smaller banks will start participating in a slightly better way. There's turnaround element involved in a lot of the SFBs and a lot of the small non-SFB regular commercial banks like DCB, CSB. So I would start looking at them. We're not looking at buying any of those yet. But yeah, banking within banking, you'll start having some opportunities emerge from these smaller banks.
All right, Prakash, on Friday, I had moved to Anjar to visit Welspun's facility. And Mr. BK Goenka has spoken to us, and we'll be playing out, parts of that interview all through the day. Any view on any of these group companies? Wellspun Corp, they currently do 1,600 crores of EBITDA, but they have the US business that's firing. The Middle East is doing quite well. And in the India business, they're touching the right spots. Ductile iron pipes, Syntex will start doing well as well. Any view on any of the names? Wellspun Corp, Wellspun Living?
Nigel, I look forward to listening to this because it's not every day that somebody gets to visit Kutch and especially Anjar and do this on the ground kind of a work. But what I can tell you is that some of the businesses that they have, particularly, their focus that has moved into water management. I'm not talking about just the pipes business, but I'm just saying, the way they have expanded their portfolio, where the revenue starts coming in from multiple revenue streams. And then they have a lot of these triggers in a couple of the companies, which are optionality at this point. So I think somewhere, of course, and let me also touch upon Wellspun Living, which is seeing a significant revival. And, the festive season in India will also be followed by the festive season. And the flag off is the Black Friday sale in the US. And of course, goes all the way to Boxing Day and beyond New Year. So if that were to kind of trigger some restocking, this month, you'll probably see Wellspun Living also do very well. It's a very sound business, great portfolio. The metrics have been a bit tepid, but things look like it. So I think most of the group companies are doing fine. There's no reason to be worried about that. What do you buy out of that depends on your allocation from a sector perspective. But Wellspun Corp is probably, it stands out as one of the best. We've spoken about this at levels which are closer to 200. So you can imagine in a year's time how things have changed. And the best part about this is that these sectors or these subsectors are robust enough and have visibility. So for companies like this, which have just scaled up, and I can also correlate this to Jindal Saw. I mean, they've also kind of, talked about how things are looking up. The performance has been reflecting all the salient. So we are quite positive on that space. And we'll look forward to listening to you quiz Mr. Goenka on this.
Prashant, as well as Surbi, the facility was something that really caught my attention, right? Over the years, we've seen hundreds of facilities. But, this was the one that got hit by the earthquake many, many years ago. It had floods as well. And they've totally transformed the business out there. So it's, a facility besides, we track markets, etc. Yeah. But the work that's been done out there, Wellspun World, as they call it, was, it was something to visit. I was at the plant even at 10:30 in the night, and I was surprised to see Mr. Goenka. He was at the blast furnace. Because I like to get in depth in terms of how the billets are made, etc. And I saw Mr. Goenka at 10:30 in the night at one of the facilities.
That is where, Nigel, I'm extremely envious of you, because I might track mutual funds and markets, which is not touch and feel, right? Yeah. But to see a real manufacturing facility or a mining facility, I guess it's another rush, right?
That said, it was scorching hot. It was really, really hot. But we'll play bites of that interview later on in the show as well.
Absolutely. And, 9:30, that's coming up. So you don't want to miss it. Two companies, lots of interest. Stocks have done well. Wellspun Living and the other one, of course, Wellspun Corp.
Let's get Prakash Diwan back with us. Prakash, thanks for waiting by. I wanted your view in the IT space. Everyone's been talking about metals, but that's not for the faint-hearted, if you're looking to play China. But the IT index has been holding strong. And Infosys out there has been, it's close to its 52-week high yet again. What do you like from the IT pack?
So I think, Nigel, while, yes, IT has been an outlier, if you really ask me, I thought once banks come center stage in terms of a revival of interest, IT would take a backseat. But it hasn't happened, which means that there could be some positions that are still building up in anticipation of things looking very positive in the US market post the November election outcome. And we're just about 2.5, 3 months away in that sense from new contracts getting shaped up for the calendar 25. So if that were to take center stage and things come back in terms of business volumes for most of the larger players, you'll probably see that follow through. But I would still refrain from adding anything in IT at this point because, the valuation, even after whatever has happened, are fairly high. I mean, you had a Tech Mahindra available at 1,200, which was fine. 1,600 doesn't really excite me. Wipro, the same thing. The move's been fairly strong. So give it some time. You could buy IT as a fair, fair weather kind of a allocation. But you would have to buy it on dips. You won't make money if you buy at these levels. There's nothing which is happening dramatically different for them to revive. Let's wait for the numbers, just a few days, and you'll start seeing numbers. So Infosys does seem like having come up with something which is getting the street excited. And I think it's in anticipation of an improvement in the numbers, particularly margin improvement, which most of the analysts talk about.
Okay, all right, got it. Thanks for joining in, Prakash. Good to have you on, and we look forward to connecting again later this week. But